All right, now do we have sound? Yeah, we have sound now. There we go. I don't know why. Suddenly, every once in a while, there's just no sound. I have to add the microphone again. That sounds no other way to say it, but that sounds stupid, Mr. Kennedy. So, anyways, walk away. Anyone that would put themselves in a position like that doesn't know how to trade. But anyways, guten Morgen, everybody. Now, as I go through the scenes here, I'm going to have to add a microphone. So when I go to risk warning, I have to add a microphone. So bear with me. Why does it do it? I don't know, but I had to restart my Windows. So apparently probably some Windows update killed things. But anyways. So welcome. Today is a Wednesday. We had CPI. It was red hot. Of course it was. This shows the danger of trading with opinion without fact. Bias is based on fact. Opinion is based on gut feeling. And so a lot of people are like, oh, we're past peak inflation. Oh, yeah, we probably have. And therefore, they're probably correct, just not this month. Okay, so anyways, we'll go through the report. Okay, we'll go through that report. We'll talk about it. But, look, what's at hand here? What's the Fed's next move? I mean, that's what it always comes down to. So cool. So we'll talk about that if you want. But let's just get on with it. All right, so let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. There we go. Hey, so my name is Wayne. I'm a currency trader. Been doing this a long time. So Mr. Kennedy is saying, hey, some guy is down about 80% in his trading account. What should be the worst month on your track record? What should be the worst month? 50%? 40%? 30%? If you look on these copy programs, there's quite a few of them out there now. You'll notice that many of them are very profitable. Oh, we're up 100% per year. But they have 30 or 40% drawdowns, and you just would never survive. You'd be fired. So it's sort of like why did Peloton go to $1,000 a share or something, and now why is it worth $10 a share? Well, it was stupid to begin with. So so whatever. Let's just get back to it. Your worst month that you would regret for a very long time maybe is 5%, but you really need to go into freak out mode when you're down, let's say 3 or 4%. You got some explaining to do to your management team, to your risk officer, to the fund managers running your program. You probably have to have a walk of shame with the clients. Like, dude. Seriously. So like minus 80 it's just so amateur. It's insane. But you don't need a license to stream on YouTube, I guess, right? So anyways, ask questions, get involved, let me know how I can help. I made a lot of mistakes too. Don't get me wrong. I'm not the world's greatest trader. I made a lot of mistakes, but I matured over the years. And I matured very quickly because what I gave up to be a Forex trader was being a venture capitalist. And I thought it was my dream job, right? And I was making decent money. I loved what I did. I had health insurance, for crying out loud, for like the first time in my life. So, it was all good, man. So to give all that up to become a Forex trader, I'm not going to just throw that away, right? So anyways, you got to protect. You got to protect. So that's how I got here anyway. So I've made a lot of mistakes, but you got to mature quickly if you're going to truly survive. What's the worst percentage of loss in a month, and how to do? I don't remember it. I don't remember the numbers. I don't remember percentages. I remember very specific moments. I don't remember numbers though, but I have had gut wrenching moments for sure. Not down 80%, no. But gut wrenching, had to fight back for 3 weeks of fighting back. And what I mean by fighting back is not building the money back, because that always leads to a disaster, right? You'll turn your 10% loss into a 30% loss if you're focused on the money. The last time I had a real battle had to do with a breach in discipline, and therefore a collapse in confidence. And so I spent 3 weeks scalping. That's all I did. Not to make money. In fact, I was not interested in money. What I was interested in, so I did 25 OCOs, and I just boop, boop, just trade after trade, just trade after trade, just rebuilding. Like, if I enter properly, if I enter under my rules of engagement, if I use patience and discipline, I can just knock these down. And again, not doing it for the money, but rebuilding discipline. So if you want discipline, one way to do it, for example, is 100 easy trades. But the thing is to sit there for weeks just knocking down real simple trades focused on rebuilding discipline. That's what I did. Okay. Did I stop trading after that? I might have taken 1 day off. Frank. I don't remember that, but I do remember the moment it happening. I remember how I felt. I remember what I did. I remember where I was, the time of day, how I felt, all that. That was right, is vivid. But things like, did I take a day off? I don't think so, but I might have. But I do remember coming back and just saying, I can't believe I would put myself into that position. It was an amateur move. And I'm talking about, this was 10 years ago, probably. In fact, thinking about it, it was the other house. So yeah, it was 11 years ago. Okay. 11 years ago. And at that time, I already had 9 or 10 years of trading experience, right? So I remember I was shocked that I was capable of trading so poorly. And so I realized I had to focus on rebuilding the discipline and rebuilding the confidence. And the money would just take care of itself, because that's just the business. You sit here long enough and you grow your account. So I wasn't worried about the money. I was worried that, again, I was shocked that I still had that beast in me. And it changed my behavior ever since as well, right? To recognize it. It's like, I imagine being alcoholic, even if you hadn't had a drink in 20 years, in this case, 11 years, the sound of ice in a glass, and the beast is lurking somewhere. You could come in and at any moment be the worst trader ever, despite all that you've done well. You always have the capacity, right? So you have to consistently and constantly work on being razor sharp and focused and disciplined and patient. Always. You can't have one bad day. You can't have just one drink. Okay? Or it's gone. You cannot have one bad day. It's unacceptable and not allowed. So anyways, yeah, let's keep going. So today we'll look at the CPI. Great. Tomorrow we got JP Morgan reporting. That's important. UMich is coming up on Friday. I think retail sales is out there as well. So, Bank of Canada, all that kind of stuff. There's a lot going on this week, and it's a good trading week. We're getting closer and closer to the interest rate decision for the Fed. So lots of interesting things going on. Let me know how I can help. And again, I don't mind sharing what I do right, and I don't mind sharing what I do wrong. Okay, cool. So besides these live streams, there is in the description below a link to my book. Okay, and by the way, my book starts out like this. When I first started trading Forex, I sucked. And after blood, sweat, and tears, I sucked less and less. Okay? So anyways, I start off right from the back, right off the bat, being honest as possible. Anyways, a link to that book is in the description below. A link to free training courses are in the description below. A link to the FX Bootcamp community, $88 a year. Okay, that's in the description below. A link to the oil trading course. We are doing lecture 2 today. Okay, we're going to do 150 years. It's actually more than that. We're going to do the entire history of the oil industry from its inception in 1859 in Pennsylvania. Now you're like, Wayne, oil's been around a lot longer than that. Yeah, but we're talking about the first time people started drilling in the ground for it. Okay. Not the stuff that just seeps out of the ground, but actually drilling down to get the oil. So that's where we're going to start all the way to today. Okay. Covering the Civil War, World War I, World War II, for example. Kevin bought the book, the prize. Yeah. Here it is, man. That's it. The prize. Like I say in lecture 1, if you're going to sit down and be an expert in the oil industry, the energy complex, and you're sitting down talking to another expert, it's assumed you've read these books and you know this stuff. It's assumed. It'd be an industry standard. You would know who Daniel Yergin is. Someone's going to drop a Yergin quote. Right? Right? You got to know this stuff. That's all. So yeah, if you want to be taken seriously, you have to know this stuff. So like I said, this will cover about, this is you could read 1,000 pages of this book alone and then buy the next book and read those 1,000 pages, or you can attend today's lecture. And I'm going to cover that history. Cool. So that's going to be interesting. So I'll see you guys at 4 o'clock today for that. Also in the description below is a link to tradersway.com. I believe they are a trustworthy, ethical foreign exchange broker. I have seen third-party reports of their execution speed. Right? It's fast. Honestly, it's not the fastest, but it's way faster than most. So probably in the top, 5 or 6 out of 50, top 85% maybe. Fastest, like plenty fast. The latency is fantastic. Okay. The swaps are huge, way above average swaps. Spreads are competitive. Okay. Cool. And from my experience with them, they actually enter your trades into the interbanking system instead of like what a lot of other brokers do is they just trade against you. From how I see them behave, it's my opinion they don't trade against you. So there you go. Tradersway.com. All right, now we got sound. All right, cool. CPI, huh? CPI. First of all, the next CPI report will come down. Not this one, the next one. This is why I'm shocked that people are shocked. Why? Let's just do the facts. When did oil drop from 122 down to 100? When did copper drop? When did a lot of commodities drop? After the June Fed meeting. Took a while. But then we realized the Fed is going to crash the economy. So it wasn't until like really the third or fourth week of June that the uptrend in prices in many commodity markets had ended. Which means it's not really reflected in this report. It'll be the next one. Oil was still probably at $115 when this was calculated. It's old. You see? It's old. So people are like, I should say market participants. Many, if not most market participants, they confuse. They're not data focused, they're opinion focused. They do things like make decisions like, if they were in charge of the Fed, this is what they would do. Dude, that's not the question. Nobody wants to know what you would do if you're at the Fed. You need to figure out what the Fed's going to do. Okay? And then same thing where, what has been, and we've been talking about this for about a week, people have come to the conclusion that we're past peak inflation, which is probably true. And they're at this opinion because they see many of the markets have come down. They've seen gasoline go from $5.50 a gallon to $4.50 a gallon. And they're like, see, we're way past peak. CPI is going to be improved, but they don't realize that the numbers they're looking at are not in this report. They're in the next report. You need to be focused on what's going into the report. Okay? Now, even then, so now we're talking about the July CPI that comes out in the middle of August. Even if commodities dramatically come down, parts of the CPI will still be dramatically high. Therefore, it'll be sort of a tempered reduction. Now, give me two pieces of the next CPI that will not come down. See, oil and gasoline prices have come down. Copper prices have come down. Okay? Great. Give me for the August CPI, which is reporting the July numbers, what two key components of inflation will not come down at all? Please take a guess. In fact, you should know this because it'll help you figure out the calculations. No, oil has come down from 125 to 100. Okay? Well, food is volatile. Thank you. Jim got them both. 100%. Wages and rent. These are the two components of inflation that are considered sticky. Okay? And rent is up 13%. Wages are up, I don't remember the number, 5 or 6%. Okay. But commodity prices have come down, will go down. Also, as we get closer to the school shopping season, so now we're talking September CPI reporting the August number, and we'll find places like Target have cut their prices significantly. Everything at Target and Walmart will be on sale. Why? Because we're already tracking inventories, and inventories are up 43% at Target. So they're going to slash prices, and that will be disinflationary. Okay? You know what I'm talking about? You see how I'm thinking forward? This is why I track inventories. If there are too much inventory, then retailers will put everything on sale, and that's disinflationary. So now we're talking that'll be reported in September. You'll get the August numbers. So, moms are at Target, because dads don't go to Target, right? Moms go to Target to buy kids stuff because they have to go back to school in September. And those prices will be sales prices. And so that'll be reported in September and October. Okay. Cool beans, right? Wow, huh? Look at some of these numbers, huh? Food away from home. You notice that prices don't go up 30% at Taco Bell. Okay. Oh, I don't know. I don't know how many I have left. The day is quite a bit over, man. So I only have these two left. I took a shot on oil, broke even. I took a shot on euro dollar and broke even. Most of my trades I cleared out last night, Sultan. So like in the day trading group the day earlier, at one point this week I had about 10 trades open, and then late the 20 hours ago or something, I took profit on most of those, and then things rallied up. That's why I took profit, and then I re-entered around the day trading group last night, and then of those, most I've been knocked out, busted out, or took profit on, and then I didn't trade that much before or after the news, but after the news I did trade like euro dollar pullbacks. And then with those got knocked out. So I don't have much to report in the moment. Most of my trading was done on Sunday. So like today, for example, after the news, I think I was short at 25. So that candle there. So it came up and then down. I think I got around 25. You can see it came down, came up, knocked me out. And then I got to do my live stream. Now I'm here with you. But I don't tend to trade the news that much because of the volatility. Okay. I'm a trend trader. I prefer to swing trade, but yeah, I tried. The day before I did more trading on oil. And again, I discussed this in the day trading group last night. Just briefly, we started on it. Much of yesterday I spent on a 5-minute chart. Let me get rid of this. Where you can just see on the 5-minute chart, right? The down, the up, the down, the up, the down, the up, the down, right? And so that's kind of what I'm tracking. This is the pullback, so I kind of walked away. And then I actually owned this at 95 last night, in fact, which is really disappointing. I owned it at 95, and it came back, hit me, knocked me out, and dropped about 20 cents below, and then kicked up. So that's the real bummer there. That's the real bummer. But anyways, anywho. Okay. What's up, welfare? Okay. Okay. Yeah. All right. So yeah, what do we want to do now? What do we want to do now? What is my view on pound dollar? Well, you have to understand it's fundamental. So with some basic analysis, you guys should know what my opinion is. So let's see. What's my view? The Bank of England believes Great Britain is going into recession. Unemployment's going to be high. Inflation is high. And there's event risk with the war in the Ukraine. They also lack a prime minister, and right? So what the hell? Do you think I'm bullish? It's like, what do you mean what's my opinion, right, AR? I'm just, I know you've been around, AR, but I'm just saying, like, I don't even understand the question. Like, what do you mean? What, I want to buy the pound? I want to corner the market? I want to own everything? Like, it just, okay? And what else is going on right now? The Fed is jacking up interest rates fast, causing a recession. And I'm sure you watched Chinese import-export data last night, right? So there's a contraction there. Global contraction is what's going on. Standard operating procedure in that situation is to buy the dollar. So it's like, what's my point of view on the pound dollar? Like, I don't even understand the question. Like, what do you mean? Do I want to buy pound dollar? I want to sell the strongest currency in the world to buy a currency that doesn't even have a functioning government? It's like, it's silly, right? It's a silly question. So anyways, yeah. So, I don't know. So I have this chart set up as bearish, and every conceivable method of technical analysis has this coming down. Cool. Okay. Now, I was short this at here. I don't even know where my... Oh, yeah, that's right. Windows rebooted. I have to fire up my drawing tool again. Okay, you guys will probably recall, even just from yesterday, okay, I was short here. And this is the conservative target. My aggressive target was here. I locked in I don't know what it was, 100 pips, 150 pips. I can't remember. I locked something in and it popped up higher than I liked, and then now I'm not in it anymore. So like Sultan's like, hey, why don't you show us? I did, dude. We're at CPI. Like the week is basically over, and now time to set up next week. I'm more interested in next week, right? So I was short here, and there's the basic target, and somewhere in here I'm out. And now we got CPI and inflation's all over, the market's all over the place. But like, dude, I'm done. Like, this week's done, man. But what about next week? Well, what I'll probably try is something like this. Okay. Does that make sense? Especially to Sultan, right? Right? So like the week before, a sell and there's the target. Last week, sell and there's the target. This week, sell and there's the target. So now I'm kind of like have this fart around, and you know, somewhere in here I probably want to sell, and somewhere around there is probably the target. Well, what about today? I'm going to spend time on the oil training course. I'm building a lecture on seismology. Okay. And then drilling. I'm on week 4 right now, where I will teach you step by step by step, machine by machine by machine, how to drill conventional oil. So let's say you think you got oil 3 miles beneath your feet. Why? You know the geology. You're like, there's a salt dome here, and there's going to be oil on either side of it. Oh, cool. How sure of you? Are you willing to spend $4 million to find out? $4 million. Well, maybe we should do some tests first. Yeah, I think so. So you spend some money, do some tests. Blow shit up with dynamite. Sounds good, right? And you're like, yeah, I think the oil's down there. Cool. So now you have to start drilling. Well, you don't want to drill into the salt. But the thing is, how do you drill 4 miles down? What's the first step? What's the second step? What's the third? It's not like you just drill down and oil gushes out. Okay? So that's so I'm going to teach you all those steps of conventional oil. Why would you trade that when oil prices are going to go back up? Wouldn't that weaken the dollar? What? Hang on. Let me see if I understand. Why would you trade that? That meaning what? That? We can go back to oil if you're talking oil. Okay. So why did I buy it at 95? Because I thought it was a bottom. It could have been. Where did I have it? 95. It was right there. Yeah, Andrew, and it is very interesting, that part of seismology. I wasn't sure of the bullshit factor on that one either, because, you know, you see geologists wearing 3D glasses and they're like, ooh, and I'm like, yeah, this is such, you know, 90s nonsense almost, right? You can almost see it like the future is in the internet where we'll have paperless offices, and you know, we still don't have paperless offices, but so I wasn't sure about like, do they really wear 3D glasses? And so anyways, it's kind of interesting. Why would I be selling USD? I'm not selling USD. What made you think I was selling USD? So you were saying back in here. You mean by buying oil I was selling USD? You lost me, man. So like this, I sold at 25, which is here. So what happened, these are 5-minute candles, right? So This came down. I waited for a pullback, and then it did this, and then I sold it, and it moved so fast that there was, right? And then it was here, and then my live stream started, and then it popped up and stuff like that. But no, I'm a seller. Okay, I'm a seller. So like these two trades I still have open from Sunday night. Look, I'm selling euro and I'm selling pound. Okay, and then with dollar, I sold euro and I sold pound. And then now, like, you know, I was out. Oops, let's go back. I keep clicking the wrong button. Sorry about this. There we go. So in this move, so I was in this move down, and then somewhere in here I'm out, or, you know, I don't know where, somewhere in there I'm out. And then here we got this huge event risk. So I'm going to let this play out. Okay. Why buy dollar? Because it's the reserve currency and there's a shortage of it. Okay. So that's why I'd buy dollar. Now, why would I buy dollar versus Great Britain, the Great British pound? Dude, let me say it again. They have high inflation, a slowing economy, an upcoming recession as defined by what its own central bank thinks. They have event risk with Putin possibly cutting off energy prices, doubling the amount of energy, tripling the amount of energy. So in Great Britain, they'll have to export their pounds to get this energy at whatever cost they can. And meanwhile, they have a dysfunctional government. Dude, sell it hard, sell it in the morning, sell it in the afternoon, sell it in the evening, sell it at supper time. Like, dude, right? Right? So sure, I'm going to sell the pound. I'd sell it against the Swissy. I'd sell it against the yen. I'd sell it against the dollar. Might sell it against the CAD. I could maybe sell it against Norway, although it hasn't been as strong as I would have thought. Could sell it versus anything, but I don't even understand why someone would buy it. So when somebody says, what's my opinion on like pound dollar? I'm like, what do you mean? Okay. The United States is not exporting nearly enough. Now they're exporting a lot and they're doing it at high prices. That's great. But the rest of the world is kind of tanking. Well, what about our imports? Now that's what's really important here. Usually America imports a lot. But if there's a household effect, a household wealth effect from inflation, see, inflation has to do more with expectations than reality. So we might be importing less. Or there's nothing to import because of the supply chain. So you might want to buy a Lambo, but there might not be any Lambos available in Italy right now. So you're like, well, you might be sitting on the money's in the bank, and you're just waiting to next year when they give you a call and they're like, hey, Wayne, we got your Lambo. You're like, oh, cool. See, if I don't buy the Lambo and the money stays in the bank, the money is in America and the value of the dollar doesn't change. If I get a call from Italy, we have your Lambo, sir. Okay, great. Now I export my dollars. The dollar weakens globally because that gets converted into euro. So the value of the euro goes up and the value of the dollar goes down. If I'm buying a Lambo, I'm shorting the dollar and I'm longing the euro and longing the Lambo, right? Lamborghini. So if I'm not doing it, then I'm not buying euro and I'm not selling dollar, which then means, well, what about other business that gets conducted around the world, like buying oil in dollars? What if there's not enough dollars available because We're not buying TVs. We're not buying phones. You're still on your iPhone 27 and you're like, I'm not going to buy the iPhone 29. I'm going to stay with my iPhone 27 because 17 cameras is enough, right? 27 million pixels is enough. I don't need to upgrade. So what happens is we stop exporting dollars. But meanwhile, people need the dollars to buy oil because oil has doubled, or they need the dollars to buy natural gas because it's quadrupled, but there's not enough dollars available, so the dollar's strong. You see? The demand for the dollar is high. Partially, if not exclusively, because it's the reserve currency. Okay? Sebastian says, will the Swiss central bank sell the Swissy? Why don't you go to the website, the Swiss National Bank website, and read? They tell you specifically. It's not a question. You should just know it. Go to the website. Okay? Okay, I'll give you an example of this. At FX Bootcamp, I told people spend an hour on every single major website for the G7. I'm like, it's only 7 hours. And create sort of an understanding, like take notes and look at the opinions and look at the numbers and look at the speeches and create a general overview about what that central bank is thinking, the personality of the central bank, and where they're likely to go in the future. I'm like, dude, it's only 7 hours. What do you do all week? You got 7 hours if you were serious about Forex, right? And Zach took me up on that. Zach, FX Bootcamper. I think he did the whole G10, probably even a few emerging markets. And now he has profiles on every single central bank. And you could ask Zach, hey, man, so are they going to weaken the Swiss franc? And Zach would just tell you, well, this is what they say on their website, and this is what it says in the press releases, and this is what it says in their quarterly outlook, and this is what they're actually doing. And I can't say it takes no time. It'll take you 1 hour. Maybe you do 1 hour a day because you got 5 jobs, 17 children, 3 pit bulls, and you're a busy dude. I got you. You can do 1 hour. And at the end of a week or two, you are now an expert in central banking policy for all the G10 currencies. But we know maybe Denise will do it. Maybe someone else will. But most people won't do it. Okay? Cool. Okay? Cool. Whatever. So I'm avoiding this for now, and I will come back to this later. Let's see. Stock market is now open. That's great. You got to go to MT5, by the way. Hoorah! Okay. Okay, stock market's way down. People were shocked. Oh my God, inflation isn't over. We still have inflation. I don't know what's going on. Okay. Well, yesterday, I think it was yesterday. I don't know. The stock market was up. It must have been in here or something. I started to hedge the stock market. So I think I'm well invested. I'm well exposed to the U.S. stock market. I own things I want to own. Some of them are like shorter term, some are medium term, some are very long term. Some of them are like venture capital type investments. Don't call it ARK. Okay. But anyways, some are longer term. That's cool. Okay. Speculative plays. But, so it's a great way to avoid paying taxes. Anyways. So what I did yesterday or the day before, at least recently, I bought an ultra short S&P 500 ETF. Leveraged. Cool. So if the stock market goes up, I'm going to make money. If the stock market goes down, I'm going to make money. But if it goes down, I'm not going to make enough money to offset all my losses. But I'll make some. And with that money I make, once I decide the worst is over and we've found a bottom, so let's say the S&P 500 drops down to 2,800. We're at 3,800. Let's say it drops to 2,800. I'll take the money I made in the ultra short leveraged fund and I'll buy the S&P 500 long, not leveraged. Cool. So that's what I'm doing. Did it yesterday. Told everybody for probably right at the beginning of July. I said I'm going to do it somewhere in here. I'm going to do it. But, okay, you don't want to hedge until you're up high. So I think I'm hedged here, which is what? Up, drop, lower high, roll reversal on resistance. Okay? Because if I'm hedging, I'm selling because in the cash market, I'm long. Okay? So I'm selling here so that I can make money on the way down, but I'm losing money here, so it kind of offsets. And I told everyone I was going to do it. I needed the stock market to rally up first. And remember, that had to do with the end of the quarter. Okay? People going to cash, people redeploying the cash, and then we continue mission is the idea. Now, I don't know if I'm right, of course, but it's insurance. It's insurance. Okay? Q3 could be another leg down. Well, we're going to find out who's naughty or nice. Hang on. Anyways, I don't know if you can you hear it ringing? Someone was calling me from Hong Kong. Ni hao ma. Anyways. So, yeah, I'm just hedged, leveraged hedge. And anyways, oh yeah, that's right. Earnings season is started, and tomorrow's JP Morgan. That'll be interesting to see how they're doing. They'll probably do fine, and then there'll be a rally, and then I think as we go on, I think it'll be mediocre. I think what the numbers are showing is that prices are up and people are buying at high prices. Now, they're not buying everything, and not everybody is buying. So if you break down the aggregate, you'll see that many Americans got free money last year from the Biden administration. Okay? And people that were already dead broke when they got the money, they've spent the money. And I know this from, I believe it was Bank of America who reported that. People that had less than $5,000 in their account suddenly got money from the government, so now they got $10,000 in their account, and then in short order, they had less than $5,000 again. What happened? They spent it. They needed it. They upgraded their car. they went on a vacation, they bought diapers and cigarettes and booze, whatever. You spend it. That's actually kind of the point. Okay? So it was helpful. But then for many Americans, remember, 90% of people didn't lose their job. They just worked at home. 90%. So they got free money too. They just sat on it. Okay? So now it's sort of like, what's going to go down this year? Well, the spending will be different. Because if you're going to take the family out to Applebee's and spend your Biden money, you did that last year. If you've been sitting on it for a year or two, you might even have Trump money in there. And you're like, well, we didn't need it. So we didn't do anything with it. So maybe this summer you go on vacation. That kind of stuff. And so American Airlines profits were up 13%. I think Marriott and all of them, they've done really quite well. But maybe you're not buying new clothes. Maybe you're not buying a new laptop. Maybe you're not buying a new phone. And then, of course, if you're ultra rich, you just don't even care. It doesn't matter. Like, you imagine, let's say you make $5 million a year. That's rich, but that's not FU rich. You make $5 million a year. You own some real estate or something, right? Cool. And you're like, oh my God, I was going to buy a $1,200 Apple iPhone, but this year they're $1,300. Oh, forget it. I mean, you just don't care. You're like, oh, I want that new iPhone. All right, cool. Oh, and throw in a case, and you got AirPod Pros? Yeah, throw those into it. And you're like, what price? You don't even look at the price. It's irrelevant. You're like, okay. So at the top end, that money gets invested anyways. Most likely, it just gets put in the stock market. The lowest end, that money's been spent. And so now we're kind of looking at sort of the middle class. I think they're going to burn through a lot of that money this year. And you'll see that it doesn't matter. See, that's where inflation comes from. For the middle class now, it costs more to fly to Orlando than pre-COVID. It costs more to get a hotel in Orlando than pre-COVID. It costs more to go to the park. The amusement park costs more than it did pre-COVID. But it doesn't matter because you got your money for free. So once now that middle class money is gone, let's say over the summer, then at the end of the year, we're going to have a change in behavior. Okay? And if you want to look at UMich on Friday, the University of Michigan survey, look at the subcomponent that related to future expectations of inflation. That's what you want to look at. Abdul, nobody wins. Nobody wins in war. It's not who's right. It's only who's left that matters. Okay. Cool. Let's go to the kitty cat. It's like one of these things. Look, Canadian dollar strong. Really? Okay. This is one that we were just talking about not long ago. Okay. Pound versus CAD. Okay. Great Britain has to spend, let's say, twice as much on energy than normal. So where's the money going? From Great Britain to Canada. Really? Yeah. So you get a top. Let's do it this way. Okay. Top, lower low. So you take a lower high, lower low, lower high, lower low, lower high, lower low. Okay. Of course it's going down. Now, the biggest question, the more complicated question. Okay. The more complicated question is looking at the previous market as analyzed by, I don't know, open, low, high, close, okay, whatever the numbers are, okay, we come up with this being the aggressive target for the month. And we've known this all month. So we're in the middle of the month here. And we knew 153.75.5 is the projected low. Okay. But here's the thing. Is this a normal month or is this an abnormal month? And that is a really tough question. Because in a normal month, okay, again, I'm going to plug FX Bootcamp. This will cost you $88 if I convince you to sign up. A year. $88. In a normal market, this projects that. No, Darko, this is just the flow of money. It's because of oil, not it affecting oil. No. Okay? That is what would normally happen in a normal market. So if you're selling now, you really, really, really are struggling with the concept of how to trade properly. If you were that aggressive, why didn't you trade yesterday? Why don't you trade last week? Why don't you take the swing trade? Why don't you take the monthly trade? Like, you're aggressive now that the Bank of Canada's... Dude, at the bottom. You're selling it at the bottom. Like, oh my God, come on. Okay? Gee whiz, now that the whole thing's over. So now the biggest question is, if this is an unusual month, and it very well could be considered that, we might be going to like down here. Okay? But the price action is not going to be, beautiful, or it could be, but you still have to pay attention to the base model and then sort of the, I don't know if you want to consider this worst case or best case, but base case is that, okay, honestly, on July 1st, if you do basic technical analysis, this is straight out of FX Bootcamp training. If you don't know that, pay the damn $88. What's holding you back? Because you think I'm going to get rich and buy a yellow Lambo? It's going to have the number 88 on the door. Like, I made $5 million selling an $88 product to suckers on YouTube. Like, dude, that's what you think I'm up to, huh? You got to turn that noise off. Okay? Look, basic technical analysis will say that predicts this. So do I ignore that? No, I can't ignore that, but I could say, well, the typical response in this situation is all the way back to the central pivot. But I say, well, but there's a lot of fundamentals here going on. This is not just pure technical. So we can go as low as down here now, but I can't do it here at that price. Can't do it at that price. It's too risky. Now, even if you made money, most of the time you would lose money. And this is what I was talking about earlier when people are asking about losses. Right? 11 years ago when I went through a painful day, what I was doing is I was making stupid, silly mistakes that led to things like selling at the projected monthly bottom. Well, who would sell at a projected monthly bottom? Someone that's not looking anymore, someone that's just trading the news, someone that's just trading the vol, someone that's just reacting. Okay? So to me, this is, despite the news, okay, this is a terrible place to start now. Because now you're like, what? The Bank of Canada raised by 100 basis points? Well, okay. Once again, you could have decided here at a role reversal 12 hours ago. Would have been a better trade 12 hours ago. Why? Because we're right And it has nothing to do with being right or wrong. I want you to really, let's go all the way back to the basics. Bears sell, correct? Yeah. At resistance. How many here? And I would like at least 100 people to respond. How many people here agree with this statement? Now, don't say things like, well, it all depends on how you find. Dude, bears sell at resistance. Is that correct? Come on now. I know you think it's a facetious question. I'm trying to program your brain. This is neural linguistic programming. You can't just think, yeah, I agree with them. You must type it out. It changes the brain. You actually use different parts of your brain. So if I'm going to rewire your brain, you must answer. The second part is bears do not sell, whoops, that's my mouse, sell at support. Bears do sell at resistance. Bears do not sell at support. So if you wait for news to come out and you get some volatility in a red candle and you sell down here, you don't get it. You don't get it. And like I felt like 11 years ago when I went through a bad couple of days and I did have a bad loss, I felt disgusted at myself. I felt weak. I felt dirty. I felt ashamed. I felt shocked. How did I make such basic mistakes? And I had to go back to the basics. What's the basic? Are you a bear on this? If you can't figure out whether you can be a bull or a bear on this, technically or fundamentally, you should really stop trading. Even technically, you should be able, but I'm much more interested in the fundamental reason here. But nonetheless, okay, is this support or resistance? Support. Is this support or resistance? Resistance. Is this support or resistance? Support. Is this support or resistance? Resistance. Is this support or resistance? Support. Is this support or resistance? Resistance. Is this support or resistance? Support. Is this support or resistance? Resistance. Is this support or resistance? Support. Take these ones if you're a bear. Don't take these ones if you're a bear. And if you don't know if you're a bear, then stop trading. And now some people, they're going to get all mad. Well, if you're so, and if you didn't, oh, and this is so, dude, if you have all that negativity in the back where you're like, you can think of 9 reasons why I'm a scumbag while you're listening to me on YouTube in your mom's basement, and you have all this hate building up, this is what's destroying you. I have nothing but love. I'm a lover. I'm an ex-supermodel. Look at me. I'm not here to offend you. I'm not here to make you feel bad. I preach to teach because I've made these mistakes too. But you got to change. If I asked you to type out whether you agreed with me or not and you chose not, why? Why are you so resistant to learning? Why are you going out of your way not to learn? Ah, that's stupid. He's asking me to type. Why? What's the big deal? It cost you too much? It took too much time? You were too afraid? You don't have fingers. Look, I'm sorry if you don't have fingers. Okay? But you got to be coachable. If you won't let me coach you, you need to coach yourself. When I first started, there were no coaches. There were no gurus. There was no training courses. There were no books. There were no classes. There was nothing. YouTube hadn't even been invented for another 5 or 6 years. And even then, when I was posting to YouTube, Google didn't own it. Think of that. When I was posting Forex videos on YouTube, Google didn't even own YouTube yet. So I go way back to the olden days. I had to coach myself. You need to be coachable. Okay? But if you even fight me, and I'm here to help every morning, and you're fighting me, you think there's something that I'm masquerading or something? I don't know why you got that roadblock. I don't know why you're so angry. You need to turn that negative energy around and harness it. It's still it's energy. You got the energy, but instead of fighting me and fighting the world and pissing on your own shoes, you should say, you know what? I'm going to focus this energy on one particular thing. And it could be anything. It could be spend 1 hour a day reading central bank policy statements or fundamental research because you hate doing it. It could be waking up at 4 o'clock in the morning to trade Forex because you don't have time during the rest of the day. Oh, well, that's hard. I know. You're disciplined, right? Yeah, I'm usually disciplined. No, do it. Find something difficult to do and do it. Prove to yourself. See, everybody here thinks they're above average, which is great, huh? So you got to be above average. You got to do uncomfortable things a lot. Okay? And then what'll happen is the things that are actually not that difficult become silly easy because you know you can get through this. Again, I'll tell you, I learned a lot at Harvard. There's a lot that Harvard taught me, but the other 90% I already knew. 90% of everything that was covered at Harvard, I already knew. But I learned 10% of stuff I didn't know and opened my eyes and all that. But you know what Harvard teaches you? Because it's so difficult. And you have to remember, 5,000 people every summer go to Harvard summer school. My cohort, which was only 10 people, of the 5,000, we did double the load. Nobody else. And everyone will tell you when you go to Harvard summer school, it's a bitch. And the 10 of us did double what's normal. We did the impossible. So you know what that teaches you? You can do anything. Yeah, you're smart, but you're the hardest worker in the room. Okay? And you carry that with you. So that was one, look, I did that, and that was one of the things I carried away. And when you look at my credentials, people that know will look at that and go, that guy's a tough son of a bitch. He will follow through. He gets his crap done, and it's beautiful. Okay, cool, right on. But you got to prove that to yourself. Are you willing and able to wake up at 4 o'clock in the morning every single day just for Forex? I know a lot of Forex traders that do that. It's just normal. That's what they do. They wake up, they work out, they get in a couple of hours of trading, their first few trades, and then they go run on the beach. This is a Forex trader friend of mine. This is what he does every morning. He's up at 4. By 6, he's got a few trades on. 6:30, the sun's coming up. He's running on the beach with his dog, knock out a couple of miles, get back, check on the market, shit, shower, shave, and you're in beast mode the rest of the day. Okay? You got to prove to yourself you can do it. You know what'll happen? The process of you proving to yourself will be the enlightenment that you seek. Okay? You might think you want to get rich trading Forex, but I think you know you're a great person deep inside, and you want to you think if you make a lot of money in Forex, maybe that unlocks your greatness. What you'll find is you got to unlock the greatness inside of you, and you will become successful in Forex. You're on the right path, and I know, there's something inherent inside of you. You know it to be true. This is your calling, but you're struggling to find it because you're focused on making the money. That's not flip it around, turn it around, and say, how can you change your habits? Because you know you're good enough and you're smart enough, right? So now you got to change your behaviors, improve maybe the psychology, and prove to yourself that you can do anything, that you can stick to it, so that you never have bad days. You never have big drawdowns. You never paint yourself in a corner. And instead, you're focused on the long term, and you're consistent, and you're reliable. And you do the research, you do the work to avoid the self-sabotage, to avoid the big drawdown days. And that's what's required. And that success you have proven to yourself internally through changing your behaviors will help you find your success in Forex. But success in Forex won't do all the other stuff. And that's why you might be struggling. At first, you want to get some experience, and then you want to focus on some education. Then you're like, okay, technical analysis. Some of the time it works, and sometimes it doesn't. So then maybe I need to know fundamentals, and sometimes that works, and sometimes it doesn't work. You're struggling, and you got to flip to the other side as well and go back to Forex. You got to prove the success inside of you first, and you know it's there. You can feel it. So you got to bring that out and then apply it to everything you know. And I know you can do this. But selling at support after the news, that's embarrassing. You're embarrassing yourself. So I am going to spend the next, 6 hours working on the oil training course, so that 4 weeks from now, I can teach you how to drill oil and then move on to the next and next and next and next. This is costing me many, 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 many thousands of dollars. I have a PhD working for me. This is great. I'm loving it. And we together are going to become experts. In this case, the energy complex. 10 years from now, I'd like you to be an expert in every central bank, their policies, and what monetary policy is. I want you to be an expert in monetary policy. I want you to be an expert in economics, both in particular macroeconomics. I want you to be an expert in technical analysis. I want you to be an expert in the oil industry. I want you to be an expert in everything you do. Because that's what it's going to require. Okay? You got to check the negativity at the door. You got to check the mediocrity at the door. And you simply, over time, need to become the supreme expert in everything that you do. And you will be fine. Okay? Abdul disagrees with me. I wish you the best of luck, Abdul. You'll probably do just fine. He says all other things will confuse. Maybe you're confused. But there's no shame in that. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. If you're in my oil trading course, I will see you at 4. Have a